Alright guys, so I'm just gonna watch the price here, see what's going on. We got news at 10 a.m. Not really looking to trade that news at 10 a.m. It's been pretty choppy here on gold. I'm looking for a long, so I'll tell you what I'm looking for. I'm looking for a long here. Let's see how it plays out. So we've broken up above this. Looking for a long to take a long. Let's see. No, I'm not taking it there. So let's see what my prices are looking alright today. We got GJ over here and a 4-hour resistance. Okay, looks like gold is actually might be ready. Let's see. Let's see what the 1 hour is saying on gold. There's news at 10 a.m. So we have jolts at 10 a.m. So I might actually take a trade after, just so we can get some more volume in the market, and then will help with the direction. Help me with the direction, and maybe just take a trade that follows the direction later in the day. So yeah, I mean, this actually isn't looking too bad. What time is it? You know what? We're gonna scale into this. Let me see. Nah. See when the candle closes. What do we get? What do we get when the candle closes? Actually looks pretty good to enter. I ain't gonna lie. I'll take two. Let's see. 19. So we just entered on a 5-minute time frame, like the bullish candle. Let's see if we get a push. Take 50% right here. So we've established so from this zone Alright. We've broken above. We have this bullish engulfing. So let's see if we get a push up to this level at least. The only thing I would say is 15-minute candle was not looking that great. Yeah. Yeah, you know what? I might get... Well, let's see. Let's see. It's a nice volume candle on the 1 hour. Let's see what we got. Not looking good. Not looking good, brother. Where's candle still above? Let me just see exactly where I answered. Okay, candle still didn't break the previous low. So you can see this low candle didn't break on the 5-minute. Not yet. This is an indecision candle, so it was not the best. entry. I mean, information. Well, maybe should have waited a bit more, but we have, this is clearly a resistance zone that had a lot of resistance. And so if we even drag it out all the way over here, I had a lot of resistance. Push it up a bit. So yeah, this is yeah. So I mean, opportunity for a bounce here. Keeping in mind 10 o'clock today, we do have news. So see what's gonna go down. See what's gonna go down, partner. Okay. Tomorrow when I trade, I'll open up my MetaTrader. I normally just take my entries off my phone. So tomorrow I'll open up the web app and you can actually see where that I entered and everything. Okay. Let's see. Got a 1 minute support right here. And then we do have this, if you would say, trend line. So prices. I'm anticipating a push higher. That's what we're anticipating. Let's see if we get it. See if we hold this support. So I'm drawing the support from right here. I don't know, man. It's not looking amazing. Uh-oh. And it's holding. It's holding. It's holding.
Value Fund, that's one of his top holdings as well. We've got to say that for another time. Clinic here with Christopher Verone with Strategas. I'll get a 3-2-1 Strategas, a very company as well. You want to learn more about that? It's simple. On technical analysis, read the books and start there. What we're going to do is at 12:15, a conversation, Bloomberg Technology, with Uber's chief executive officer. They're going to lift up the conversation on what appeared to be bang up earnings as well. Futures -7. Stay with us. This is Bloomberg.
So still on the 15-minute. This wick hasn't gone below this one, so that's good. See what's going on, man. Definitely could have taken a better entry on this trade. Definitely should have waited at least if I was on the 1 minute for an entry. Like, wait right there.
Wow, long time, since 2006. Okay, and when you got on the board, did you have to go to Starbucks every day? And
let's see if we hold this 1 minute support.
When you check in, do you have to wait in line like everybody else?
See if we hold it.
Wait in line like everyone else. That's an important part of the process, to see how everything's working, how long it takes, what's happening in the store. I take pictures of the cases.
Come on.
I do all sorts of things with my drink.
So what's your favorite drink, can you say? Is that a state secret?
I make a joke about this, so I like my coffee black like me.
Now, Howard Schultz has been a mentor to you, I bet. Is that correct? He's the founder of
Sure,
Starbucks.
for sure. Very important.
So what did he do that made Starbucks so successful? There are other coffee chains around the world. It wasn't like he invented coffee chains. What did he actually do that made it the biggest in the world?
He really started off from the very beginning saying that he wanted to create a different kind of company, and that he had this point of view about leading through the lens of humanity. It sounds like it could be a cliche, but it's not at all. It is very much in the DNA of the company, how we look at things, how we do things. It's always through this point of view of people. And so at the end of the day, I think he put people first, not only in terms of the partners of the company, but also in terms of the customer. And at the end of the day, that is what has made the company so great.
You can't push up that. Oh, okay, jeez. Uh-oh. GJ's pushing down. That was a good opportunity. Uh-oh. Normally, sorry, that was GU. GU and gold move similar, so yeah, similar direction. So if GU's pushing down, gold might just break the support. Let's see. So, let's see, man. I saw this, but
Live from New York City this morning. Good morning, good morning. Equity futures negative about 0.2% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Barra.
Live from New York, coming up, the debt limit deadline may come as soon as June. The Federal Reserve's two-day meeting begins in Washington, and Morgan Stanley planning 3,000 more job cuts. We begin with the big issue, one and done.
Likely one and done in May.
One and done.
One and done.
I think one and done is probably the answer here.
If the Fed says one and done, you're going to see financial conditions ease.
I think the Fed has an incentive to...
All right, we're getting a nice little
As to what Jerome Powell does
push here on the 1 minute.
The number one issue for the Fed is not growth, is not credit
We
conditions.
still have higher lows on the 5 minute, on the 15 minute, on the candles. So that's a good sign. If we could close this 15-minute candle green, that would be beautiful. Oh.
The Fed's job is not done.
You see that
To
resistance.
discuss Bank of America's Megan Swiper alongside New V's Tony Rodriguez. Megan, first to you. Is this Fed truly one and done?
You know, John, we still have time to see whether or not that will indeed materialize, but our house view is that this will be the last rate hike of the cycle. But as was said up in that lead-up, the Fed is still going to be in data-dependent mode. What's still most important to the Fed is inflation. They're still going to be monitoring the data that comes in. What's very important here is whether or not there's been a shift in bank lending behavior, effectively tightening that the Fed thinks is already in the pipeline and basically being felt by the economy. These are the things the Fed will be having a very watchful eye on in the months ahead.
This seems like a pretty strong 1 minute
But the data is still going to be
support area. So it looks like we are good. Looks like we're doing okay. Just waiting for this break right here. And for this break right here. We should be good. Now, should entries could have been down here or on the break of this. Entered a bit prematurely.
As we look forward and look towards the back half of the year,
Or are we good?
we'll start to see
Or are we good?
economic flow into the economy here.
I don't
Tighter
know
lending
now.
conditions, we think, may be
Are
one
we
of the
good?
key drivers. But then the
Let's
evidence
see.
that it's
It's
still
5
not clear
minutes
enough
in.
to the Fed versus the evidence that
Oh, oops.
inflation is sticky, it's much higher than their target, and their belief is that they need to
Oh,
at
no.
least pause at this new higher level in our minds for the balance of the year. So that means that the bar for the cut is higher than what the market is currently pricing.
Did I speak too soon?
The last time they met, the bank had just failed to hike interest rates. They meet this time, the two-day meeting begins today. They're about to hike interest rates tomorrow after another bank failed. We've had Silvergate, SVB, Signature Bank, First Republic, throwing Credit Suisse, that makes it 5. And Megan, yet still they've hiked interest rates. Can you think of a parallel, a moment in history that is similar to this one, where a central bank like the Federal Reserve has looked at bank failures and chosen to create increasing interest rates?
Yeah, John, it's a good number that you bring up here.
Did I
think it
speak
really
too
does,
soon, brothers and
suggest
sisters?
that the Fed has its credibility at stake here. If their view is hiking into more banking failures, right, this is putting more pressure on the
Oh,
banking
I might have spoken
But
too
really,
soon.
enemy number one here
This
is
might
still
be,
the inflation pressure. And what we've seen from banks and the data that effectively the Fed has, we get this data on a weekly basis every Friday. You can monitor how banks' deposits are evolving, how their lending behavior has been evolving, and things seem to be stabilizing there. That's really the key word, and it's the key word that Powell and Secretary Yellen are very much so keeping a close watch on here too. Stabilization and still this very hot inflation.
Okay, I
does
think
support the Fed going and delivering another
we
25
have.
Again, the Fed thinks and believes that banking lending behavior is likely going to evolve in the coming months and create this additional tightening pressure on the economy.
See,
This
this
is all to be
was
seen. We'll get the senior loan officer survey for April, and will give us some indication of whether or not bank lending standards have tightened further. But still, enemy number one here is inflation. The science from the banking sector that we're getting is stabilization. Both of these two things together encourage just that additional juice left to deliver this.
It's kickstarted the process, that's for sure. Some might say accelerated a process that was already
Okay.
tighter lending standards, tighter financial conditions.
On a 5 minute, let's see, it's the wick. Okay, so we do have this wick came down below this one. So let's see. I think getting a break now. I think the next couple candles will determine our fate.
You mentioned we certainly are seeing that now with the bank balance sheets and the impairment to their asset side of the balance sheet. That's what really was a big part of what drove some of these failures. In terms of seeing the flows through the broader economy, we came into this with a very resilient consumer, with a very resilient corporate balance sheet. So in our minds, it is going to take longer to flow through. That's a strength we're seeing in a low unemployment rate. But as we look forward to the end of the year,
Okay.
our view is that we'll see a mild
Can we get a
recession.
push?
It's likely to kick in.
Can we get a push?
2024, at the very earliest,
Push
we'll
it
start
to the
see signals
limit.
of that in the fourth quarter. That is when
Let's
we
see.
think will eventually lead the Fed to start to shift to cutting rates
Okay, baby.
early next year. But whereas the market is
Okay.
pricing a September cut, for example, we think that's way too early, and that's because the economy is going to be a little more resilient because of a strong consumer, and inflation is going to be
Do
a little
have
stickier than what the Fed needs to
small
see
resistance
in order
right
to be
here.
able to pay.
You mentioned the economy and the labour market. On Friday's payrolls, just to give you a sneak peek of the median estimate in our survey so far, we're looking for something like 180,000 in Friday's jobs
Let's
number.
see.
That's down from 236 in the previous month.
We break
Unemployment
this
is down from
resistance.
3.5% to 3.6%.
Okay,
according to our
Playboy.
survey at
Do your
Economists on Wall
thing,
Street
21.
and beyond. That's for Friday. We've got to get through
3,
the next 24 hours.
2,
The Federal Reserve just around the
1.
corner. Mike McKee, a busy week for Fed speak, the Federal Reserve, and for the data too.
You can boil it down to maybe
It's looking good.
go away. That's what the Fed would like you to think. So that will color the way they handle this meeting and the statement that
It
comes
is
after.
looking good.
The question is going to merge from the highest rates in 16 years to how long they will stay
It is
there.
looking decent.
After the great financial crisis,
Okay, guys.
cutting rates. It wasn't for 15 months after the
Okay.
7 months after the 2000.
What time is it? 9:08.
Or mid 2000s rate scare.
Okay.
So they don't always.
Okay, so we have news at 10.
But they have in the past.
So if we are on, oh shit, if we are on this uptrend,
Telling you that it's going to
I'm gonna close half my position here,
So expect a change in the statement.
and then I'm gonna just hold the rest
Much as they have the last
up to this zone up here.
they got to the peak.
Alright, because it's looking like we are heading up.
Rates rise again.
Mistakes on this entry was, should have entered over here when I saw more confirmation, or right here on the break of this. Those are some mistakes. Some positives is we put the stop loss at a good area underneath here to give the price some room to fluctuate.
This is the balance sheet.
Okay.
And it has been rolling off much more
Alright.
slowly than the Fed anticipated. They're not reaching their caps, particularly with mortgages, because who wants to refinance or sell their house right now? The mortgages are so much higher. And so the balance
Let's see.
sheet is absorbing duration.
Maybe I spoke too soon.
Markets less sensitive to interest rates, and that is pushing down on financial
Okay.
conditions.
Maybe I
So
spoke
they're
too
out there,
soon.
they might have to adjust the pace of their sales.
Mike McKee,
Oh,
thank
no.
you, sir.
Is there
Let's pick
news
up
right
on that.
now?
That's a really important point. Megan, what's the story with the balance sheet? Just to build on what Mike was discussing.
At 10.
Yeah, I think the balance sheet is a really important point here too. In our view, we are not expecting the Fed to tweak anything regarding the balance sheet, specifically
Cool.
with this meeting. We really don't see the Fed changing anything
I mean, this is a strong support area.
asset holdings until we see that.
Let's see. Oh, okay. That's not strong anymore.
Quarter of next year after we see signs of a mild recession in the U.S. So Basel can get the Fed to have to adjust
Come on,
the balance sheet
man.
policy before that. Effectively, are concerned about financial market stress. So if we see periods of treasury market illiquidity where the Fed needs to readjust its holdings, be that buyer of last resort for treasuries in the market, those more liquidity
4, 3, 6,
dynamics that they
5.
kind of get the Fed
It's looking like
but we are not expecting
It's looking rough now.
And think that in
Shit.
the end, it's really going to come down to the economy
Oh
turning
man.
before the Fed makes a
Can we
comment.
hold?
Just looking at treasuries right now, the 10-year 355. Tony, I've got your 10-year call for the end of this year at 325. You think we've already seen peak inversion? I guess my question to you, Tony, this morning is, what's left to play for?
Oh no.
Well, John, I think what's left to play for is a little bit of a tailwind from that modest decline that we're expecting. So when you kind of pan out to a really broad asset allocation, you know, right now markets we feel
Okay,
maybe
I
have
think-
a little bit too much optimism built into
I
them.
think this might
Overall,
be
I think we want to be modestly
red
overweight
trade.
equities and overweight to fixed income. So we do think that that little decline in rates that we're expecting
I was
is
so
gonna provide
happy.
enough of a tailwind to provide pretty attractive returns from fixed income asset classes. So it's a good hiding spot for investors who are concerned about that slowing economy that we see coming forward, and who are concerned
Yeah, I
about
think
the
we're-
Fed maybe
I think we're done, boys.
on the tightening side of the equation.
And Megan, on the inversion call, you seem to be on the same page. Are you retaining a long bias in the treasury market?
Yeah, you know, I think Tony makes a very good point here too. You know, if you look at history as a
Damn.
you usually see tend to rally pretty meaningfully in the 12 months following the Fed delivering this last rate hike.
Yeah, it's a red day.
This is indeed what we're seeing. This is the end of the Fed tightening cycle. Now is a good time to be buying duration. I particularly like buying duration in blue yields. Effectively,
It's looking like.
protected products.
I mean, unless we push up, and hold this support that I said was strong. Ah, rough.
Stick with us, Tony, as well. We're going to talk about the debt ceiling in about 5 minutes, so don't run away. I know that deep down you really want to run away because no one really wants to talk about the debt ceiling, but they will have to in Washington next week, and I'll get to that in just a moment. Equity futures on the S&P
Yo.
500 this morning, negative
What you
0.25%,
saying?
with some movers going
What are you saying, bro?
Just here, bro. Huh? Yeah.
Okay, okay. Fuck, yo, bro, I might have to go out to fucking Brantford, bro. The water's not working and the camera's down, so I'm gonna go fix the camera anyways. Check out
Oh.
the water all out there.
Okay, yeah, no problem, bro. Another time.
Are you busy? You gonna go out, you gonna come through after you're done trading?
Oh no, bro, I can't still. I'm
Oh, you have to talk to
yeah.
Okay,
Yeah.
okay.
Alright, bro.
Alright, no worries.
Alright, you
Alright, bro.
Looking for more growth avenues. Shares treading water here. Let's move on though, because Chad, John, this is fascinating. Chad, it's an education technology company reporting earnings yesterday, and it warned that ChatGPT is threatening the growth of its homework help services. John, this is what
Kids are cheating on that
Apparently.
homework, apparently. Okay, thank you.
Let's see, man. Hold this. No, fuck. We're breaking under. We're breaking under.
President Biden is setting up a meeting with top lawmakers. That conversation with AMH and DC up next.
Okay, good game. Good fucking game. You teasing me, man? You teasing me? I ain't closing out early. You teasing me? No, you ain't teasing me. You ain't teasing me, eh? You really gon' do that? That's crazy. That's crazy. You really gonna do that to me?
So many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from and where has it gone? Because
See.
right now, it seems a little different than what I've seen before.
Yes,
See if this is a.
David, but COVID, you know, I ended up with hair
See, man.
back
Let's
down on my
see.
shoulder, and I finally realized
It's not. Odds are not looking like in our favor, to be honest.
to my waist and my
But hey,
hippie days before that,
out of control the price.
and I had it cut off in the summer of '75, and I've gone to the same person.
Let's see. Can we get a bullish engulfing? Can we keep this bullish engulfing going? Come on, please. Please. Can we keep this bullish engulfing going? Support. Push, push, push. Push, push, push. Push, push, push. It's not really looking that good right now, but we'll just leave it. Just leave the price action right now. 6, 5, 4, 3, 2, 1.
What's your second question? Debt limit. The president still hasn't talked to me.
A new debt limit. Deadline turning up the heat on Congress. Secretary Yellen said in the X-State, writing in and out of the congressional leaders the following: "We will be unable to continue to satisfy all of the government's obligations by early June, and potentially as early as June 1. The House did its job. Now it's on Biden." That's the message from Speaker McCarthy, writing the following:
It's not looking that good, man.
Senate, as we speak, that would put the risk of default to rest. The clock is ticking. The administration responding with invitation, calling top lawmakers to the table. A GOP aide confirming McCarthy would attend that meeting. For more, let's head down to AMH down in DC. Anne-Marie, just some movement here in the last couple of days.
Now we're still underneath this resistance, so we need to break above it. Nothing really means anything right now, but if we do get a rejection, then that would indicate we're probably going to be heading lower. If we get a rejection right here.
But this is something that the White House says they cannot sign up for. They want a clean debt ceiling bill. But at the end of the day, the ball was in Biden's court after Speaker McCarthy was victorious.
Let's see.
Together. And now what President Biden is doing is not just inviting the Speaker of the House, who, yes, will be attending that meeting next week, but he's inviting all of congressional leadership.
Let's see what happens.
They're saying this is progress. The big issue they have, Jonathan, of course, is the timeline. Even this week alone, we have the House in recess. You have Speaker McCarthy in Israel. And then when they come back, it's a very short timeline until they get to June 1st, with Treasury Secretary Janet Yellen saying potentially that is the first state as soon as the U.S. can exhaust these measures of how we are paying our bills.
Anne-Marie, I have to say that May 9th, which is a week from today,
okay, now we have this resistance
right
here. Wow,
No, it doesn't, because
it's looking good. 5 minutes. See if we get a bullish engulfing on the 5 minutes. What is okay, 15 minutes, 10 minutes left. Okay. Let's see what happens. Push, push, push. Push. Wow, I'm impressed.
The president's going to be leaving on 2 key international trips to Japan and to Australia.
I'm fucking impressed.
It's very difficult for Washington to act in time, and that is when people are concerned. And if you look at Greg Vallier's note, he says he's now calling this really a debt crisis. And
so we have the 5 minute, 15 seconds. If this closes bullish like this, we'd be pretty good, man. We'd be pretty good.
Let's be clear about that. The prospect of the X-State falling a little bit earlier than anticipated. You look through the T-bill curve across various maturities, and the at-risk security seems to come in just a little bit. And one of those T-bills,
We are looking pretty good if we close, which we did. So we're looking good, man.
and what the at-risk securities look like right now.
So, like I said, I'm gonna actually close half my position here and take the trade all the way up here. Because this is a challenge account, mentally, I just like to see
run to late July to early August. But we do think that Yellen is giving the market, giving policymakers her view.
Now let's see if we can break this resistance. I'm pretty confident now in this trade. Pretty confident. Now, I did a lot of errors in this trade. One, entry was off. Need to be more precise with my entries. 2. Well, yeah, 1 was mostly just my entry was off. That's what I would say is I could have picked a better entry. Could have had a better entry. 110%.
The next few weeks, right? And it seems like it's, as was mentioned, you haven't really seen signs of outright panic yet. Ultimately, the bond market, the longer-term Treasury bond market, is going to be what we will see response this. Probably is likely to see more risk-off flow, more of a bid for longer-dated Treasury yields, which does seem a bit counter.
Oh, we have this resistance right here.
Tony, bonds get into trouble by bonds, and to be specific, Treasuries get into trouble by Treasuries. Tony, that raises a question: is there any risk outside of the at-risk securities?
Okay, baby.
Is there any risk at all outside of those securities?
Jonathan, we think that there is. So, the debt default hand grenade right now is in the hands of...
Looking good, man. We're looking freaking like a spring chicken.
That is early June, even though we think that's a conservative assessment.
I'm treating this.
And we agree that it's in a more of a
Okay.
July, early August time frame.
This is looking good, man.
You're going to see volatility increase. And the risk is that you can see this suddenly begin to really
Broke above that.
And as that depth of the
15-minute candles.
as volatility rises, that's going to impact
this is looking good.
capital market pricing. And that's when you can start to get into some scenarios where companies may not be able to refinance. We don't expect that to be the case. We do think that ultimately the Brinkmanship will lead to...
This is looking good. I see a lot of positive air. See a lot of positive air with this trade on gold right now. Okay. So, I don't know. You have a little pullback right here. Right. No problem. Every time I say I see this trade looking good, we get a red candle.
And people start treating treasuries differently. Now, it hasn't happened before. I'm wondering whether you think it's going to happen anytime soon.
Jonathan, it's not ideal that happens. It's not really our view at BofA that we will see the Treasury debt credibility really get challenged in a meaningful way here. And the question really comes down to where else is money going to go at the end of the day. Treasuries typically...
It's looking good. It's looking good.
Of being the risk-free asset.
It's looking gravy.
The key thing that will ultimately is getting challenged here is whether or not is the timeline of these payments.
What time is it? Oh, it's 9:24. It's 9:24. 30 minutes.
And certainly this does pose questions and a lot of uncertainty around effectively volatility and political grandstanding and it's ultimately still going to be the story of Trump still needing to respond.
I thought we were looking good, man. What's going on, baby?
We do think that's ultimately where money is going.
Trust in this market is just amazing.
Damn, god
and it gives
damn.
politicians on both sides of the arm the luxury of acting irresponsibly when they so decide.
Well, I like that 5-minute bullish engulfing candle, so I'm sticking with it. I'm sticking with this. Okay. Pushing up. Pushing up.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety.
What the
at moment.
price looks like it's just frozen.
The recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover.
But
Okay,
with
baby.
rising interest rates, with inflation,
Yup.
those are things that peoples and families and businesses haven't had to deal with.
Okay, I'm just gonna stop saying okay, baby.
Haven't had to operate.
Just gonna stop getting excited.
It's causing quite a lot of
Red candle every time I get excited.
For us, because we're up and down the country in branches.
At 4 minutes till the market opens. What's the ES saying? Pushing down. So that's good. That's good. Just pushing down. Okay. Love that for you.
Your online home for weekly Boston Symphony Orchestra and Boston Props performances. See new concerts that go behind the scenes, plus acclaimed rival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor of Bank of America.
You got 3 minutes left.
Let's get you some morning calls. First up, Morgan Stanley upgrading down to overweight, pointing to an attractive valuation. Roth and Cam upgrading Penn Entertainment to buy, seeing a potential beat and race quarter on Thursday. And finally, Citi downgrading Coinbase to neutral, expecting regulatory headwinds to continue. Coming up, Darryl Cronk Wells Fargo remaining defensive ahead of a busy week of risk events. That conversation up next. Your opening bout just around the corner.
Oh no. It's not looking good. Got a little double top right here. It's actually not looking that good now. I do like the 5 minute engulfing, so we're keeping it, but that's not good. Don't like seeing that. Got 1 minute, 15-minute candle looks nice. 15-minute candle looks nice. 5 minutes. Got a minute and 44. We're looking to not break this low here. We've broken the high, but we're looking to not break that low.
Why does everybody want to be a consultant? And what are all these consultants
Right on the
doing?
broken the high on the
I think
50.
that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
We got 1 minute left.
I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big
15
companies.
minutes. We did break this low right here. Did we? Like barely. Things are looking good, guys. Things are looking good. We're above this resistance. Just need to break above the support. S&P is moving down, or the ES minis are moving down, and that's a good sign for gold. So maybe when the market opens, we'll get some volume.
This is so exhausting and this is so all-encompassing. Listen on Bloomberg Radio. Streaming on YouTube and Bloomberg Originals.
Let's see. So Jolts is at 10 a.m. So I got 20 minutes. Or I close at least half of this position, or all of it if it's in the red. Jeez, not the type of volume I wanted.
23 seconds away from the opening band this morning. Good morning to you all this Tuesday. Slightly softer, negative, down about 0.2% on the S&P. The Nasdaq almost totally unchanged. Yesterday, the S&P 500 not giving you a relief rally at all, even with a solution provided to First Republic, acquired by JP Morgan.
Okay, S&P's dropping. S&P's dropping. Okay. So, liking that for gold. Liking that for gold. Come on, gold, do your thing. Do your thing. Do your thing. Yup. Do your thing.
In the FX market, look out below euro. Euro dollar printed new highs for the year.
Do your thing, gold.
Backed away every day since. The euro is negative against the dollar for 4 straight sessions, the longest losing streak.
Okay, I'm gonna close half soon.
It's been a while since we've seen persistent euro weakness.
Just wanna see what the volume's looking like.
We're back down to about $74.
Oh, come on, push, baby.
Into the session, we're negative 0.3% on the S&P and the Nasdaq. We're down by about 0.15. One stock to watch at the open. Uber reporting a smaller than expected quarterly loss and delivering.
Okay. Yep. Closing half right here. Closing half. One. Close half. Damn, it takes so slow. 1986, 65, 1986, 65.
Since November on an adjusted EBITDA basis, Uber coming in at $761 million in the first quarter, significantly above street expectations, and giving us that second
closed half.
Of adjusted EBITDA, $800 million,
Okay.
$150 million again above what the street thought.
Probably should have waited for more confirmation to close half. But.
Consumer behavior here. If you look at gross bookings,
Okay, so target up here for the Jolts news, and it's good. Green Day, guys. That's how we did it, man. 2001, 80.
Above expectations. There's some data, I suppose, that points to the idea that
Okay, wonderful. That's amazing. Made a couple mistakes. Could have got better entries. Could have gotten way better entries on today. You know, could have gotten entries here. But that's okay.
On an adjusted EBITDA basis, could again note that freight decline being a slight drag on gross bookings.
So that's a question you can ask the man himself. I know you've got an interview coming up in about 3 hours from now. I'm looking forward to it. Darren Khosrowshahi, the CEO of Uber, sitting down with Ed Ludlow and Emily Shang. And what's the focus of that conversation going to be a little bit later?
Okay, I'm gonna go make some tea. I'll be back.
I really do think that this is a consumer that's holding up. If you go by gig economy metrics, we don't see that everywhere else, right? You know, we're trying to discern with crystal balls for this earnings season what the outlook for the second half of this year looks like. If you go to the semiconductor sector, they'll tell you we're going to recover. Do they see the sustained demand from their riders, and how are they going to keep that demand going through the latter parts of this year? I'm really interested in freight, Jonathan, because if that dropped off, it declined in the quarter gone, what's that tell us about global logistics and supply chain?
Ed, looking forward to the show. A couple of hours away, Bloomberg Technology. Ed Ludlow sitting down with the Uber CEO alongside Emily Shang, I believe. That's going to take place on Bloomberg TV a few hours from now. About 3 minutes into the session, equities just a little softer, negative 0.4%. Uber a whole lot higher, up by 7%. Let's stick with earnings. MGM Resorts under pressure, despite delivering a Q1 beat. Analysts expecting a slower summer in Vegas to weigh on shares. Katie, that stock down 2%.
Indeed, there's a disconnect here between the numbers and what the market's doing, because this was a big quarter for MGM. Of course, this quarter might not repeat itself when you think about what could happen this summer, but apparently everyone is going to Vegas, at least for now, at least in the first quarter. Revenue in that market, which of course is MGM's largest, it soared 31% to $2.2 billion. Adjusted earnings jumped by more than 40%. And Macau, too, it posted a big rebound, John. That business more than doubling, and in both of these markets, of course.
And that's it for that trade, guys.
In Macau, a lot of that rebound, of course, coming out.
Looks like we're getting a push down even further. Damn.
MGM earnings overall, they came in at 44.
Just screenshot
The
this.
average analyst estimate, just for context here, was just 10 cents, so a big beat. But as you can see, traders apparently not too impressed. MGM down 2.5%. Caesars too is under pressure. That company reports after the bell.
Not a shocker, just a little lower. We're down about 3% on MGM, as Katie indicated. That's the story for them. Let's talk about Big Pharma. Pfizer out with better than expected results, doubling down on its 4 forward guidance, the CFO had this to say: our strong balance sheet will continue to provide the flexibility for future dividend increases and share repurchase activity. Kelly lines that stock up by a little more than 1%.
Yeah, even though the guidance is unchanged, John, but that move, the 1% move higher here at the opening bell, was driven by really sizable beats on the top and bottom line. Earnings per share coming in at $1.23. The street is looking for 97 cents, and primarily that was driven by stronger than expected demand for its COVID-19 products.
All right.
Antiviral Paxlovid, as well as its vaccine.
Okay, I think we could go down here on GJ.
Yeah. China, as well as a government contract mostly being delivered in the first quarter. However, I would note that when we look at that shot revenue, for example, came in at $3.1 billion, still represents a 77% decline from the first quarter of last year. So a smaller drop than expected, but still objectively a pretty large drop. And our analysts here at Bloomberg Intelligence are saying today that these results are, quote, nothing to get excited by, noting that ex-COVID sales actually missed expectations by about 1%. And our very own Sam Fazeli saying the fact that the guidance is unchanged shows how hard it is to forecast COVID-19 revenue in 2023. And I would note that 2023, as a result, has been pretty tough for the stock. Even though it's up 1% today, it still remains lower by more than 20% this year.
Kelly, thank you. Thank you very much. That stock is up by about 1% right now with early trading.
Okay, let's see what happens. The jobs report.
Relatively speaking, on the Nasdaq, we're down by, let's call it 0.16% on the Nasdaq composite. For the world market, yesterday it was much higher. This morning it was essentially unchangeable. The 2-year, let's call it 4.13-ish, on the 10-year, 5 years coming a couple of basis points. The view on the Fed, the meeting starts today, concludes tomorrow, and here's what you're going to hear a lot of over the next 12 hours or so. That is the consensus on the street. Darryl Frank at Wells Fargo also calling for another 25 basis points, having investors to stay defensive ahead of a busy week. Granting this, the risk-reward dynamic is not currently attractive. Darryl joins us right now. Darryl, wonderful to have you on the show with us, buddy, as always. Darryl, I want to start with this quote, and it came from my team here at Bloomberg Intelligence. According to the data, as of last week, nearly 81% of S&P 500 companies have beaten analyst estimates, the biggest proportion since the third quarter of 21, and yet this, the median stock has outperformed the index by just 0.1% on the day of results. Darryl, why aren't these stocks being rewarded for decent earnings?
Yeah, I think that's exactly right. I think it's because people are still, John, worried about what the future holds. If you look at the earnings estimates from today, we're talking about $51 per quarter of Q1. Fourth quarter still has all-time record highs for earnings. It's hard to paint that path of consensus estimates on where we're going. So what's interesting to me is both the earnings still have to come down, which is not a new story, right? But companies are not getting rewarded for any kind of beat that they have. Margin pressure is there. And what was quiet about April was everybody talked about what a great month April was for the index and everything else, and we know the narrow leadership in that story. But the two best performing sectors in the month of April were healthcare and staples, both defensive, right? So we're seeing defensive starting to take over. The leadership and the earnings estimates just don't sync right now. And that's why we think the risk reward dynamic here, we're half of 1%, I guess is the way to say it.
So, definitely not getting back in. Just want to watch the 10 o'clock news.
I think you've got to see the natural order of the cycle play out. So, I mean, everybody knows this, but think about it logically. You have an inflation shock, followed by a rate shock, followed by a bear market, where we are right now, followed by a recession, which is where we think we're going, followed by rate cuts, and then followed by that bull market. So you've got to get to that rate cuts and bull market. You know, history tells you, if you look at this, John, the bottom of the equity market, the S&P 500, doesn't come until after the first rate cut historically. It's typically about 5 to 6 months after the first rate cut. So you tell me, we don't think that the first rate cut happens in 23, we think it probably happens in 24. But even if you take the most aggressive estimate of 23, even still for 5 or 6 months, you've still got a while here where we need to kind of reset valuations and multiples where the risk reward becomes attractive. The equity risk premium is still 125, 30 basis points. You need that number to be 2
of this, and I think you alluded to it there, Daryl. The missing piece of this, we've had the rate shock. We haven't had the credit reality check. Are there reasons to believe that we will?
Well, again, if you use the idea of a natural order of things, what typically happens in these cycles is you have a liquidity shock, which you could argue is happening in March and April with the stress in the banking crisis themselves, followed by a profitability challenge, which we think we're in right now, right, where margins are going to squeeze, profits are going to challenge. And then what typically comes with varying timelines is credit shock. So we think that lies before us. You can debate the materiality, you can debate how much, how deep. But I would note, John, and this is really important, what people are missing about what the bond market is telling you today is that the length of the inversion of the bond market every major yield curve. It isn't the basis points, it's the length. Now we have the 3-month 10-year inverted 6 months and the 2-year 10-year inverted 12 months, which are both very consistent time frames within the session sets in after the initial inversion.
Do you think, Daryl, this conversation may happen does someone? That may be all the way to explain why the regional banks are struggling to get off the mat and rally. Yesterday, even with the First Republic solution, KLE down 2.8% this morning, down another 1%. The Russell underperforming, it's a big tilt there towards the financials, the Russell down by 1%. Daryl, does it explain why the regionals have struggled to rally even with solution after solution being offered over the last month or so?
Yeah, I think there was a lot of people out yesterday saying, look, the JP Morgan, First Republic deal or solution, I call it that, is the end of this crisis. If that were the case, we should be seeing a bigger rally yesterday and today out of financials, and they're just for nothing, right? There's just no activity there. So I think the combination of people worried about some of the small, medium-sized business models, what is coming in more regulation in that space, which actually, depresses earnings or things on margins. But the idea that net interest margins eventually will squeeze, I think probably has that area. If I'm looking at attractiveness today, John, if I can get a 3-4% dividend on financial
Yeah, absolutely. We had a fear that we would get to this point again, given the environment. John has been weak for many, many months. But here's the thing, is that the end in sight is not quite close. When we talk to a lot of bankers, they're starting to push the horizon out even into 2024 potentially for deal making to come back. Now there are signs of life in the capital markets, debt issuance ticking back up after a very long slump here. But again, it's not enough to keep staff on board in mass. So we've seen thousands of job cuts here being planned at Morgan Stanley.
Yeah, but that's probably a better idea. No?
And then you also have Bank of America fairly recently, just months ago, saying that they would cut hundreds as well. Remember, they have been cutting hundreds here and there as needed. Now again, 2024 is no promise. And not all is bad. Over on the buy side, for example, we still have hiring here at the private credit firms. But remember, some of these firms, like Apollo, are coming off of hiring near the top of their range at the end of last year. Still hiring this year, just maybe not at the pace that they're seeing before. Now remember, if you couple that with what you're seeing, for example, at Credit Suisse, where again, UBS, Credit Suisse, you have even more job cuts underway with the integration. And then if we see more bank consolidation as well, that could also mean more synergies.
Okay, no worries.
Market here, coming up with talent, and not clear about where all of that talent goes, especially because you don't have competition from other industries the same way you did prior to when we saw the rate tightening cycle here. So again, not clear how much more pain there is to come, but certainly this is the start of another wave.
Shonali, we've all been following the conversations that you, together with the remaining team, have been having over the Milken conference. Can you just give us the tone of things around regional banks right now? I saw those comments from Katie Koch just yesterday. Not really encouraging, were they?
No, she definitely came down harder than many, many others, but there are a few tones that a lot of people have hit here. That commercial real estate worry. Mark Rowan over at Apollo even saying he sees a second wave coming. The office vacancies numbers being a lot worse than many people realize. That is one part of the larger commercial real estate sector, but one manager told me it is a small part of their portfolio, but like most of their problems. And so certainly until that shakes out, it's unclear how deep the pain can get. And from the perspective of the folks here at Milken, the market has not repriced to reflect that reality. So again, a lot of things on the sidelines here to be watching out for in terms of more pain some of these money managers can feel before they start feeling a little better and being able to enjoy the other parts of the portfolio that they're starting to dip into here as some valuations start to become more depressed.
Brilliant work. Just looking forward to the conference through today as well. Shonali, thank you to you and the whole of the team on the West Coast for the moment covering these issues. I want to get back to the job cuts. Not just Morgan Stanley, but AI starting to disrupt the labour market. IBM's CEO saying he expects 30% of its back office jobs to be replaced by artificial intelligence in the next 5 years. I want to bring Ed back into the conversation.
Oh, we are slightly up on the account.
So IBM CEO Arvind Krishna joined us in New York yesterday.
Jeez, prices are bumbling down. Now, GJ, this was actually a good sell opportunity. I just wasn't able to get my entry that I wanted. I wasn't looking at it. But yeah, this is a 4-hour resistance. So, you know, this break right here. And double top. Definitely a wonderful opportunity. But I wasn't able to capitalize on that one today. Okay, so we got 7 minutes. Just make sure I'm still recording up here. Okay, I'm still recording.
In 2023, he told us yesterday in that conversation, Jonathan, he now sees a shallow and short recession by year end.
Him and everyone else seemingly sees the same thing. Thank you. A very consensus view there. If you missed the promo a little bit earlier, look out for Ed Ludlow sitting down in conversation with Dara Khosrowshahi, the Uber CEO, together with Emily Chang a little bit later this morning, about 2 hours or so away on Bloomberg TV. In the broader equity market, about 23 minutes into this, we're negative 0.4% on the S&P with a sector price action. Back with us is Katie.
More losers than winners on a day like today. Let's look at some of the winners. You do have healthcare in the green, as to is discretionary, as to is that tech sector, but still really small gains, small losses too, except if you look at energy way down there at the bottom, off by 2.7%. You have materials and financials on the back foot as well. Let's quickly go to some education stocks, because on the back foot as well, after we heard that AI warning from Chad, really having some ripple effects here.
Katie, thanks for that.
I'm well yourself.
Trading Diary up next.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Hey,
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
he's a day trader among so many day traders. And so he's on a bus after a game, and he's day trading on the bus. And Belichick sees him, puts him on the spot. In many ways, it's convention, right? For people that I don't see maybe once a year. And so it's kind of all come together. My firm, my charity, my fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Let's call it 26 minutes into the session. We're negative here by 0.5% on the S&P. Down just a touch on the Nasdaq, negative by 0.1. Real underperformance in the small caps of Russell, negative more than 1 percentage point. As the price action hits the trading diary, what a week. Factory orders, durable goods at the top of the hour. The main event tomorrow, Fed decision, Chairman Powell news conference. Then it's the ECB's turn on Thursday. After the bell on Thursday, Apple results. And finally, rounding out the week with the US payrolls report. The median estimate in our survey so far, 180,000 from New York. That does it for me. This was the countdown to the open. This is Bloomberg.
Yeah.
So many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, where did that hairdo come from and where is it gone? Because right now, it seems a little different than what I've seen before.
Yeah, it's going out a little bit, David, but COVID, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I had
Okay, I will call you
a
this
very
after.
loyal person, and I used to have hair down to my waist in my college and my hip days before that in Michigan. And I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother, many times older, who was a young gal cutting hair in Amherst, Massachusetts. And I still see her out, and I finally just said to her, COVID's enough of a change that I ought to be able to do something new.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influencing Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands.
Okay, I
a
will call him
country
this
that's
afternoon.
heavily influenced by American culture. Is everywhere you live. In the Philippines, they're obsessed with country music, for example. They love all things American, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it would finally help them beat their biggest competitor. $1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imagination. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millions. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realised very early that there was a problem. hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realised something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted a million peso cards. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day. A Molotov cocktail was thrown at some truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, the family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number 3.
Okay, I'll give him a call, and then I'll call it.
The biggest revelation from my reporting was rumours that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilise the situation and to frame the owners of the coalitions that were fighting to try and curry favour. I just thought that was so shocking, and of course Pepsi denied it. How bizarre that a company would be accused of bombing their own truck. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third-world country. He hated seeing his fellow countrymen get ripped off in business by this huge multinational American company who wanted justice. Del Fierro rounded up over 800 winners of 3-4 He got them together to
But how long is Patrick going to wait?
over $400 million. He divided between those holders of Lucky Bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
Namin siyempre to Bloomberg Director on that too. And tell the people marketing the food. So we had mounted our own company in the year.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. We had a meeting at Pepsi's headquarters to try and resolve the problem. But he said,
wow. Look at that move with the jobs reports. I had a phone call.
those courts decided that
But
this was a problem that should be heard in the Philippines,
okay.
and not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145, and another.
Wow, look at that. Look at that move, guys. I was on a call just now looking for buys. Yeah, man, looks like we're gonna push up exactly to where I was saying, but just did not want to risk that, man. Yeah, looks like we're pushing up. Yo, oh, you had a long night, eh? Or did you already trade? How much were you up? What? Huh? Huh? Oh, $77. Well, damn, bro. And that was early. That's good, then. I'm good, up $200 today. And there was news at 10. But yo, there was I took profit and put my stop loss to break even, and then it stopped me out, and then it went my way. But bro, after what happened on the live account, I just don't care. Like, you know what I mean? Like, I'm not trying to get slipped. So yeah, and that's it, man. You know. Damn, 440. You must be getting bored now. No, what I mean is predictable, is what I mean. Okay. I'm actually recording right now. Yeah, hold up. Alright, guys, well, we're gonna turn off the live stream soon. We're gonna turn off this recording soon. It's not live, but you can see. Hold up. You can see exactly, the price is heading exactly to where we anticipated it to go with the volume coming in. So yeah, if anyone's still in, well, I mean, it's not live, so no one would be in that trade right now, but just to show you how we did our analysis, we were right, able to take a little bit of profit. Wasn't able to catch the big move, but again, we're not looking to get slipped. If we look at this trade, you can see the higher lows and then the support. So that's why we entered. We had a strong support here and increases the probabilities of the trade going our way. All right, so tune in and we will be posting another episode of this. All right, take care.